Okay, let's get started. Sorry, I was a bit later today. Get myself organised, really. A couple of things to do today, so we'll get up and racing. Just let me know. I'm pretty sure I'm coming loud and clear, coming through loud and clear. Okay, so overnight action, very bullish from the US, which is interesting. It's pretty much, I think, because of the potential trade deal and the idea of a trade deal coming through, even though it's starting to cool, or the concerns are starting to increase again that nothing's really going to happen. Excuse me. After China said that they want another meeting before signing off on anything on phase one, and I think overnight I read somewhere, I just couldn't find it again, that they were going to delay that the signing of phase one. So that just brings into doubt the actual, well, supposed phase one trade deal. But it seems to me that was enough. The idea that they're actually trying to step forward, whether it's fluff or not, and the longer it goes on without actually getting done, the more likelihood it is just fluff. And they're not willing to come to a deal yet. They're just willing to save the market from itself. And it looks like it was enough to, coming into the US last night, coming into earnings, where the earnings come out a bit better than expected. So I think it's in the US with earnings, it's talk up the worst and hope for the best by the looks of it. So they're talking up a drop of 3% contraction in earnings from a 12% gain previously, or increase previously. But the first, I think it was JP Morgan and a few others, come out quite positive and gave good guidance going forward, and that was enough to kick on the markets. Of course, they sold off into the close. It's hard to stay. I think it's more intraday action, chopping around. You know, the bots kick off and start loading up on the market, pushing them higher. All these sorts of things. Intraday action is really, the volatility has just increased, and the market backed away from its highs, but it did finish stronger. So we look at the ASX, it's expected to open up about 50. So it closed down, it was around the 29.30 mark, and it's around 80 at the moment. So looking up about 50 on the open on the ASX, as long as the SPY holds around here. But this trend up looks like it's definitely considering pushing up to 67.28 or 67.60 over the coming sessions. You can see that extension is roughly even, give or take, as long as this one kicks up. If it rolls over here, it's rolling over a bit below this 28 zone, which potentially could lead to a lower high. But at the moment, when you tick over to the US, and they're looking quite strong, it looks like they're completely not worried about trade anymore. It's like they try to factor it in as worse as it's getting, as bad as it's getting. The concerns of recession are sort of passing. And the IMF come out and said last night that if there was no trade war, growth would be fine. The problem is, it looks like Europe disagrees. Europe's actually heading south. Germany's looking to, increase stimulus if they have to, because they're concerned about a falling economy, a contracting economy. So it's kind of the outlook at the moment is really mixed, and you've seen that day by day. We're getting whipsawed up and down. A lot of the shares in the ASX are not kicking on. No one wants to hold them, and if no one wants to hold them, it's it's a good sign that, well, potentially there's still concern out there. Which, on the flip side of that, it's a good time to just get squeezed out. People will be chasing the market higher if they're not getting that rollover, and that's my biggest concern at the moment. Is what I'm looking at. You see the US, this move up's holding lower highs. This is the Dow, Dow futures, by the way, but so it's getting that overnight action. Let's just flick it over to. Let's just see what the actual index itself is doing. So much of the same action, and this is what we're looking at previously, bouncing off the support. If it's held the higher lows and it's starting to press higher. So I'm really thinking that there's a gun into new highs from here. At the very least, push into new highs before it rolls over. That's, the way I think the market's teetering at the moment, the Dow especially, pushing to the new highs. The S&P is very much the same type of price action. So if that's the case, that's going to drag us higher, even though we're, by trade talk, if US and China continue along this track of not doing nothing, that's not going to be so great for Australia. We're looking at dropping rates, which, it buoys up, it buoys up, what do you call it? Lending, which is good. But at the same token, you don't drop rates because of a healthy economy. You drop rates because of concern of growth. you're trying to stimulate growth through lending. Now, for all it seems that it's doing at the moment to Australia is not really lending, it's just housing. It's pushing up house prices. So if it's pushing up house prices, you've got to remember that that's going to take away of the spending capacity of income, or not income capacity, or spending capacity, I'm trying to say, of households. So if they're paying out more on a mortgage when you're not getting an increase in income levels and the average income levels, which I don't think you are, I'm just guessing that, but the cost of living is going up, then, and if people mortgages are going up, obviously you're getting prices. Well, the thing is, the banks are not passing on the cuts anyway, fully anyway. So it's kind of like, well, the more the RBA cuts, the less we're going to get flow on anyway. So we're maybe at our maximum or the best mortgage levels that you're going to get. So you're still, anyone new that going into the market that's trying to buy, the price is going to be buying at higher prices. So I just don't see how these RBA cuts are going to stimulate the economy as much as what we think, when we're still concerned about overall growth, from China, and I guess increase in buying from China, things like commodities, things like that. So I don't see the overall outlook. I think it's purely that it's FOMO, fear of missing out, chasing the US going higher. We're going to go higher too because we just follow along, follow suit, and that's so that this is the Dow. It looks like we're going to there. If that's the case, that's probably, say we wash out the highs to 27,600, it's another 600 points away, which is not much. Could be a couple of sessions. It doesn't mean just because it pushes through the high that's going to back off. It could keep going. You might get this sort of leg up. So we don't know how strong it's going to be. I just assume the way the market's going, it tends to do that. If you think it's going to roll over, it's going up. If you think it's going to go up, it's going to roll over. That sort of thing. The opposite mentality, because if the whole herd thinks it's going down, it's going to go up. It's going to keep squeezing them out, and the vice versa. So at the moment, everyone's talking about China problems. Everyone's talking about, the headwinds of the economy, and the market keeps going up. We keep factoring in, we're happy with it. The US is happy with a weaker economy. They're happy with the slowdown, as long as there's no recession by the looks of it. So they're just factoring in, I don't know what they're factoring in, but it's still edging higher. So it just means that you've got to look at it from a long bias into the ASX at the very sort of worst case scenario. And if we go over to here, we could easily get up to 67.50, without any much problem. And you can see, actually, let's go back here. I've got the ASX here somewhere. And this is sort of the price action. You could easily trade up into these highs. Say we get up here sooner rather than later. At 67.33, we're trading around, it's only about 80 points high. So we're going to try and get most of that today, which will be interesting to see how it goes, because it's still well within that contraction, the overall contraction of the market. So it could easily pop up here. We were talking about this, I don't know, way back when, the market pressing down, holding lows, higher low, which it did, pressed up, potentially holding another lower high and heading south again. And then it could just continue to oscillate. We're trying to factor in or watch what's happening rather than try to factor in what we think is going to happen. And at the moment, it's pretty clear the US is going up. And don't forget, we've got earnings. If earnings are going to continue to come out better than expected, like we said, expect the worst, I guess prepare for the worst in earnings, and anything's going to be a winner, which anything is going to drive the market higher. So if you start getting into earnings, and I wouldn't expect the market's going to back off anytime soon. If they think that earnings are going to be better than expected, they're going to ride the trend, ride it higher, and see where it goes to, and then slowly potentially start to, realize that there is still issues around, and we're just at higher prices than we were before, which would mean the ASX. It'd be interesting to see if we get up to test this zone, and if we test that zone, we're breaking up and out of contraction, and then it would mean a steady lift back into new all-time highs. We don't know just yet, so keep an eye on that. Sort of day by day, we'll just keep looking at this, these levels up here at around 67.30 or so. See if we can get up there. We're going to open probably where we open up at the moment. We're up 7 at the moment. We're expecting up 50. If this is more of a contained open, it'll be interesting to see that. But yeah, where's the SPY? SPY is holding, so as long as it holds here, expecting up 50 or so, which would take us up to the what's that? 50.6700. up around here. So yeah, that's it. We've still got things that are reacting to trade, like the Aussie dollar's heading south. They're still, get rid of that, still reacting to trade. They're not reacting to the US going up as such. You know, a weaker US dollar. It's still the same sort of factors. It's just that the US kicked off last night because of some good earnings. And as soon as the good earnings come in, the bots will kick off and start ramping price higher. And it could have got a bit extended. And you can see that by the fact that they closed lower off the highs. And that's into the close. That's just meaning the short-term traders are selling into it. So the bots have turned off or whatever. I don't know what you like to call them, but the algorithms have kicked in earlier, ramped the market higher, along with intraday traders, pushed the market higher, and anyone biased up has been diving in left, right, and centre. And then the market pulling back off the highs into the close is just a good sign that it's more intraday action than anything else. What was I looking at here? So anything related to, you see the Aussie's heading south. So that hasn't really changed. It's got nothing to do with the fundamentals of the US market. It's got more to do with trade. And we got this little ramp up when RBA talking about rate cuts, and that's just a flush out. And then the market proceeded to head south. So you're heading south on two things: further rate cuts potentially, and concern about US trade deal, US-China trade deal. I mean, that's still lingering. And I think it's going to come time where they're going to have to sign. They're going to have to talk up signing, because if this, probably don't have to do anything. Trump's going to keep quiet as long as the market's heading higher. He doesn't care. But if the market starts to turn south, then he'll get on Twitter and start to punch those keys. So that's the Aussie still heading south. You got Brexit. Brexit have ticked off the pound. I expect the pound, we were talking that up yesterday, a rally. Come on. We're talking that up for a rally off this level. You can see we put that up in trading views, and it did press up, consolidated around 26.38, and then pressed up into the offer zone. So it'd be interesting to see if it rolls over from here and starts to squeeze on these buyers that are built up, or just continues its way higher. If it consolidates around here up until the European Open and goes again, any news, if you're long earlier, or even in here, you probably try to hold through a trend, because the momentum's up at the moment, and any talk of a Brexit deal is going to lift the pound, because there's a lot of, we know that's probably, if you just go back to the daily, a lot of short positions still built up. Short's been building up here, a bit of a relax here, they've built up here, so there's still that squeeze going on. It's just the zone where the daily's starting to get extended, and it's probably a prime, time where it could roll over, but there's still some shorts to get squeezed out there. That is the pound, the US dollar. What did it do? It dropped off into the close, and then it rallied. I think it started rallying again later on. It just ticked off the US, and that there's safe haven yen selling. So anyone that's into the safe haven yen is just bailing once you get the US ticking off into, risk is going on into equities. So not too bad. We'll see. This market is still, gold is teetering at the moment, which is not going to be good for, your goldies, and it did drop off last night. So that's going to probably cause gold stocks to get sold off again. There's no reason to hold if you've got Aussie gold going down and physical gold going down after a big run up, and it's just not kicking on like we thought. And the reason why it should kick on is not happening, as in trade concerns you should get in safe haven buys. It's not happening. They're getting sold into now. So there's no reason to hold gold stocks just at this stage. So I wouldn't expect them to be too strong today. Let's just see. So it's opening down. It's down slightly at the moment. We're green across the board just at this stage. It's probably going to be stronger as we go along. I wouldn't expect banks to kick off too, because they're still, battling with higher interest rates. Sorry, what am I talking about? Lower interest rates. So that's a major crimp on their earnings. Whether or not they pass it on, but I think there's going to be a bit of a fuss if we cut rates again, the RBA cut rates again, and they don't pass on anything, then there's going to be, I think there could be a bit of an uproar there, but we'll see. But either way, you wouldn't expect, rate cuts to help buoy banks. It's just really that, it's just the overall market. It's just funds, ETFs are buying. There's a big thing about ETFs at the moment. If you don't know anything about that, read about that. There is, it's the distortion in price discovery they're talking about. So when you get people looking at individual stocks and reasons to buy it, they're looking at fundamentals or technicals or something. But when you've got an ETF, they're just buying the ETF for sector rally, you're going to get some crappy stocks are going to get bought up as well because they're part of that ETF. Fundamentally might be not worth buying, yet they're getting bought up. So they're getting distorted. Prices are getting distorted on the increase in ETF activity or buying. So sooner or later, that will come to a head, and all that liquidity into ETFs is going to come down, potentially come down. So it's just making it a tougher gig, and you'll see that with these spikes into the close, and we've seen it time and time again on the ASX. You're getting movements into the close, say plus 10 or down 10, depending on, and that's where a lot of liquidity could be gained through the ETFs. They can start to balance it into the close to give you the closing price. During the session, maybe not so liquid, not liquid enough. They will move, but they're not liquid enough, so they get the bulk of their balancing for the ETF on the close or on the open. So you're getting these distortions in prices on the close as well, which we've seen and we've spoken about many times now. So that's one thing. It's worth doing some reading on that, just so you're up to date on. I haven't done a lot, but just so you're getting up to date on what the issues could be and what could be causing some issues. SPY still, look, it's not opening up quite as strong as we thought, which is not, all in all, that should mean the SPY is going to move down, but it's not. The SPY is actually holding around where it closed, pretty much, give or take a point. So this could start to drift lower, or we get a sudden spike on the ASX. But we'll see. I mean, who wants to buy a match 50 plus 50 points on your stocks if if it's getting up to all-time highs again? I think I'd be struggling to do that, and that's why I'm just getting kept out of this market. I'm not seeing anything that covers what I look for, that pops out to me in the way of setups. I'm not seeing anything that's really prime to jump into, and when I do, they're not carrying on, they're not following on, and it's just getting a bit frustrating. So it's happening in a lot of these stocks. EOF was, and that's kicked off. We were looking at that kicking off, and it didn't. It just got sold into, spiked lower on news, positive news, but it has kicked off again. Still, that one I'm not primed that it's not getting, this kind of move up is gradual and then getting sold off, and it's just looking like it's getting choppy. We're looking at QFE yesterday. Well, QFE yesterday, that was looking great right up until yesterday. And then, it's looking like it's starting to hold higher lows, but instead this looked like potentially one move down, pop up, secondary move down, which could take out the lows at 44. So there's still concern in a lot of stocks. Maybe there's that shift from punting stocks or stocks that are looking for growth than the value investing up at highs. I was read somewhere about that big shift in some of the stocks. So people are just buying those momentum stocks that are already on the way up. But either way, I'm not finding the setups that I like, and I'm not finding the ones that I do find that are kicking off. We turn around, they're getting stopped out fairly quick. They're not going on like they were, what they would be in a bull market. So yeah, it's tough going at the moment. So don't get disheartened if the shares are not, if you're trading pure shares, they're not kicking off. There's other opportunities, I guess. You can trade into some currencies. You can trade into some gold. You can trade short on your with your CFDs, via your CFDs. You can do anything. So you don't have to be pure share driven to find some yield or find some action to the markets. All right, so that's probably about it, guys. Any questions? Anyone that's on, just whack any question or something you want to quickly look at before we call it a day. We'll see how we go tomorrow. Just keep an eye out for an alert in the morning. We might have to change the times. It's just not worth doing it at the moment. It seems like we've only got a few people watching it. So let me know if it could be better organising something, if we can, for after hours where people got a chance to look at it, to watch. Otherwise, we'll just see how we plod along. Anyway, all good? No worries. All right, guys. Thanks for joining me. We'll speak to you potentially tomorrow. See you later. Bye.